Hi, good afternoon, everyone. This is Baha Pitts, and today is Monday, May 27, 2024. Happy Memorial Day for everyone that is celebrating that. It's a U.S. holiday, a bank holiday, so I'll be taking the day off myself, but I'm going to get started with the weekly technical breakdown. I haven't done one of these in the past month and some change. I've been busy working on my day trading, scalping, and intraday trading system, and also been working on my top step accounts, which I'll show shortly. But I found today some time, and I want to get started by looking over the futures markets. I'm going to go over different sectors, the S&P 500, the NASDAQ, some Forex pairs, and some metals. So without further ado, let's keep this video short. I'm going to present my top step screen, and you're going to be able to see that in just a moment. So with it being a bank holiday, I'm not doing any trading yet, but it is a pretty good day to just look at the daily time frame, look at the overall setups that we have going on in the markets, explain what's going on. Last week was a pretty slow week. It was pretty choppy, so I didn't really see much going on, and so there wasn't really much trading on my end. Let me just let this pull up. Should collapse the screen right now. There we go. So first one I have on my chart is the S&P 500. You can see this is the new Top Step X platform. I have my top pairs that are on my watch list favorited already, so we should be able to swing by pretty quick. You could get kind of lost in the amount of pairs they have to offer. So I do not trade micros, and pretty much metals, they all move very similar. Same with the FX pairs and the indexes as well and gases. So I just picked the top ones that I like to trade, and that's how I diversify my portfolio. For those of you that are wondering why I don't trade something over another, I read price action, and like I said, they all pretty much kind of move in unison in each sector. So I'm gonna get started with the S&P on the daily. We can see that we just reached some new yearly highs, and price did stall out earlier this month. We can see on the 16th of May, we did retest the yearly highs, and price is currently struggling to break higher. We don't really see much happening at the moment. I do see a potential long bullish trade if we can get above the last week's highs, just sitting around 53.70. But draw a horizontal line just for you all to see visually where it's kind of struggling to break. And I'm looking for new highs. Maybe we can get a break, some sort of pullback continuation. I'll look for a nice long. As you can see, we did have an uptrend. We were moving above the 200 EMA for the past several months. So it was on a really nice rally. We did have a decline in late April, and we can see that ever since that decline, price has been struggling to break higher. That's another reason why I'm not really interested in any longs, and another reason why I haven't really been doing any technical breakdowns. We've just been in a very slow sideways phase in these markets. This is the first of a few pairs that I'll be breaking down, so you can have a full explanation by the end of this presentation. But just for you all to know, we did have a nice recovery. It does look like price is attempting to break higher, but I do not do impulsive trades. I need to further confirmation, and that's why I'm going to be sitting on my hands until 53.66 is taken out, and then I'll look, and depending on the reaction, I'll be engaging and deploying some capital. As of now, I'm sitting in cash for the S&Ps. We get going on to the next pair. Let's go look at gold. I'm going to make my way back up to crude oil in just a moment. Gold is very interesting. We had a heavy decline, and I'm not interested in any trades in gold right now. I'm actually going to remove the drawings. I was marking this up last week as I was doing some analysis. But we also, similar to S&Ps, we reached yearly highs. You can see 12th of April of this year was some yearly highs, and price just stalled out ever since. Very similar to the S&P. We are currently struggling to break those yearly highs. price did went up for the retest and it was a failure. So we can see that decline was actually a heavy decline. If we did stay above 2375-ish and start to rally up higher, then my bias would have been more towards a temporary correction of the bull trend, but it was a heavy decline and we just broke past that and had a deep retracement. Now we're sitting around 23.27 and it does not look good for the bulls. We are still in an overall uptrend, but this is now in a range. And for me, I need to see the 24.55 taken out, or if not, I'm not even interested in looking at gold until that alert is taken, because we do have a high chance of price continuing down, breaking 2283 and starting a potential bear market in gold. So no clue right now. We're just sitting on the sidelines. Gold has had some pretty good rallies in the past. We can see that this type of correction is not uncommon. It does happen from time to time. We see that it happened back in late October, early November. We had another one of these major corrections in early December. And you can see how long it could actually last. This one right here actually lasted, wow, approximately 60 days, about 2 months. And then we had another major correction that went on for a couple months. So we just finished a strong rally in April, and I'm expecting another one of those sideways movements, which could last a couple months. It's just a slow year for gold as of right now. We did have a nice uptrend earlier in the year, so it's not like we are experiencing any major declines. It's just right now, it's a big indecisive moment, and I don't want to be tying my capital and margin in something that is not moving right away. So I'm going to sit on the sideline for gold. Let's take a look at crude oil. Crude oil is dropping as of now, and I'm not interested in buying crude oil at the moment. It doesn't mean that it won't change. If we look right here, we could see I'm gonna draw a horizontal line around $80.36. I'm looking to break those highs. If we could break those highs and continue northbound, then yes, we could potentially see some buys in the near future. If we do that this week, awesome. If not, we are also below the 200 EMA, which is also another sign that price may be going on down further. Another indication is right here. Around 77.18 is some recent swing lows of the month, and price is struggling to break above. Is actually broken those monthly lows, and that means that we could see further decline towards the downside. I'm not selling this because I don't like to short long-term indices, metals, these type of instruments that have historical long biases. I don't like to short. I could look for sells on the intraday time frame, but for the longer term, I don't like to sell. Crude oil is a little bit different. As you can see, it's been in a longer term range for the past couple of years, and this could potentially start a decline at which we may see some sellers coming in heavier after this range low is taken out. We have some magnet levels from back in February. We can see late February. We do have some buyer stops, which do need to be taken out. That should give more momentum into the pair. And if that does happen, as I'm projecting, then we could potentially look for some sells because we will then be in an official bear market. So we have a couple things checked off on the checklist when it comes to looking for potential trade setups for a short, but I do need to see those lows taken out. And right now we're struggling, we're hesitating, we're kind of bouncing around. And this is what I call a choppy market condition. I don't want to look for any longs nor shorts until further confirmation. We're in neutral bias, neutral territory. We could break up higher, pull back, continue north, and hit more yearly highs, or we could break this $80 range, pull back into the range, and continue to chop around. The third scenario is we can break below, have enough momentum, pull back, and continue on down towards last year's lows, which is around $68. Or we can break, fail, and come back into this range, in which the range is too tight for me to trade anyways, continuing the indecisive movement. That's crude oil. Euro FX, we'll get into that later. That's a pretty interesting pair. Natural gas, oil is pretty much very similar, but as you can see, natural gas is a little bit different from crude oil. So let's take a look at this real quick. We're also in a longer term range. It's been happening for the past couple of years now. You can see back in June all the way until now. That's 1 year range. And then if I expand the chart even further, you can see end of 2023, we did have a huge sell-off on natural gas, and we're struggling to break higher. And we do have these yearly highs right around here, in which price could potentially break higher or not. It all depends. But as of right now, yes, we're bullish for the time being. Price did have a little bit of a deep retracement. We can see I have some lines marked off right here, the $3 mark taken out. I may look for some longs to take out this magnet level at 330 and all the way up until 360. So there's a potential long bias on natural gas very soon. So if we could take out last week's highs and continue northbound, then more than likely I'll look to deploy capital on the natural gas. We are in a, like I said, longer term range, but it is a big enough range for me to trade, and I don't see any major red flags in the sell-off. Let me give you my tab real quick. And yeah, that's about it for natural gas. So it's on my watch list. And let's take a look at Dow before we go into the FX pairs and this video. So the Dow, same. Like I said, the indexes move very similar. 200 EMA, we are still above, so we're still bullish, but we are struggling to break higher. We can see that on the 17th of May, right around this date, buyers did try to attempt to break it on up to new yearly highs. Similar with the S&P, this is just a little bit more visual. We are pulling back down. So at the moment, I don't like to short. Like I said, I don't like to short these because we are way ahead of 200 EMA as well, meaning that we're still in a very strong buying territory. And with that being said, I'm going to leave that one alone. I'm going to go into the Euro FX, and then I'll end it with the NASDAQ. So the Euro FX, we can see, I haven't even looked at this until now, but yeah, choppy, chop, chop, chip, chop. So we are currently attempting to break last week's, the 23rd of May's highs. If we can break these highs of 1.08850, more than likely I'll be looking for some longs, and there's some magnet levels right around 1.1. So I'm gonna mark this off so you all can see. And that's a pretty fair trade setup if that can happen in the next day or two. So I'm gonna be keeping an eye on Euro FX. I day trade and scalp this one though, so I'll be looking at shorter term entries and exits. But on the longer scale, we do have a potential bullish week. I don't really see bears coming in right now, but if we can break below, what is it, the 24th of May, I believe that's Friday's lows, more than likely we'll be continuing on a pullback, which is then going to become too deep for me to look for longs and may actually be interested in selling. But I would need 1.07780 taken out for me to potentially go into some sells. So we are in a little itty bitty of a indecisive situation right here. Like I said, I'm more prone to go long because we have some stops right here early April. We have some stops in middle of March and the beginning of March to take out. And if all goes well, we could see Euro FX spike and hit yearly highs. This is just my own analysis based on price action. I haven't even checked the news yet, but that's just my analysis of Euro FX in a nutshell. Lastly, I want to go on to NASDAQ. So you can see I have copper, all of these, it's all the same. They might have a little different price action, but it is what it is. When you're experienced enough, you're going to pick a few and put it in your own basket and just trade what you trade. NASDAQ is pretty bullish, and I do like this. It's just that pullback was a little bit hefty. We had a pullback on the 23rd of May last week, and we are looking to test 1853 lows So I'm going to put a horizontal line just about right here. These aren't exact, by the way. And I'm going to put a horizontal line above these highs because right now this is a pretty manipulative bar. So at the moment, I need to see a new rally coming on out of 1900s. And if we can have a small pullback, I may be looking to deploy capital on NASDAQ, very similar to the S&P and the Dow. So you can see that they're all indices. They all move very similar, but they might have different prices, but the price action is the same, still above the 200 EMA. And that is it for our weekly technical breakdown. Like I said, it's going to be much shorter now, and that's because I have been improving on my price action. You can see the top step account is right here. This is just currently taking this, just wanted to try something new and test my skills out. If I can get funded and maintain that status, that's great. And yeah, we can just look at the news ahead and this. So there's some speeches tomorrow around lunchtime. So I won't be swing trading. I call it swing scalp. So I swing trade into my day trades. So I look at the higher time frame downwards to get my some entries around lunchtime. China, this is 12:55 around midnight. So there's some Fed speeches. Fed speeches usually signal manipulation. And if that's the case, I don't take any trades around Fed speeches. So no trading tomorrow. Let's see, maybe London session. There's some setups, but looking at some US session trades, there's a speech right around 9 o'clock a.m. New York time. So there's possibly like an hour of trading tomorrow afternoon or tomorrow morning. You'll understand what I mean. The 28th is a Tuesday morning, New York time. So there's some potential for there. And then Wednesday, looking ahead, there is nothing crazy. Yeah, just looking for high impacts. Just looking for specifics. CPIs and GDP is already out the way, but we do have US GDP coming out in a couple of days. So be careful on the 30th. That's the end of the month. There's US GDP. And CPI for Japan is coming out on the 31st. So right around the end of the month, we have some, Canadian GDP. So end of the month, pretty much later on this week, we do have a couple of days where there is going to be some high impact news. Other than that, we have a pretty clear week. And as I said, I'm not going to be trading until possibly New York tomorrow. And that's it, y'all. Hopefully you all had a pretty detailed breakdown. Like to keep the stuff nice and short. And if you have any questions, leave it down below in the comments. And our website is currently down. It's undergoing some major maintenance. It's been about 9 years I've been using this web developer, and I'm going to be transitioning to a different one. So just bear with me as I make some improvements on the site. But if you have any questions, contacts are going to be below. Still have my Twitter, still have my email. And looking forward to a potentially great week if we can get out of these ranges. All right, y'all. Have a great week. Peace.